Well, ladies and gentlemen, this could be Donald Trump's golden goose, white whale secret when it comes to the stock market turnaround. It is the current price of the energy sector and the crude oil futures, the energy ETFs, they're all down. We're getting to the sweet spot to where we were in 2019, 2020 before the major global pandemic. This is when Trump had the amazing economy late 2018 to 2020. And we know what happened in March. But when it comes to this, we're looking at the crude oil futures. We're looking at what's been happening in terms of the dialogue that's been spewed by Axios and other liberal sources who say, well, it's going to be a big problem for the shale industry, the fracking industry in the United States because of how low the oil is going. Well, no, this is the sweet spot. And we know that companies are going to have to innovate if oil goes lower, and normally it's temporary. But take a look at this. You can see this is the crude oil futures, and they're saying, well, they're going down mainly because of the fears of a recession, the talk with all of Trump's tariffs. And yes, Trump's tariffs are, as a byproduct, causing oil prices to drop. Now, a lot of people say, well, we haven't really felt it yet. In my area, oil is still at a certain price. I mean, people, they still complain to me about egg prices and say egg prices are still up. Well, if it's up in your select state, that's not a total wide view of the country and where the egg prices are. The egg prices are going down across the country. That's just the reality of it. Now, I don't know about your personal grocery store. I'm not trying to gaslight people, but I'm just saying, same thing with like gases at the or prices at the pump in terms of, well, maybe your gas isn't necessarily going down right now, but it should go down. And even top articles are saying when they refuel the pumps, the prices will be even lower. So let's take a look at this. We saw what happened. Obviously, when you look at crude oil prices, you look at gas prices in general, prices within the energy sector, you want them to go down, but not too low. It's the same thing with inflation versus deflation. You don't want to have a lot of inflation, but you don't want it to go too low. That's why you're trying to find that sweet spot that I've been talking about, the foundation of this economy, which is like around, if you look at trueflation, you want it around like 0.5% to 1% because it's more volatile. But even when you look at the core inflation numbers, you would like to see it around 2%, around 1.5%, maybe a little bit lower. If it drops too far, then you're talking about serious problems. That's what happened in March of 2020. And you can see, you would think, well, oil prices going down are good. Well, if they go too low, the companies are not going to be able to make money off of extracting oil. And I mean, it's really like Saudi Arabia. They can get oil around $10, $20 per barrel, but they have to mark it up significantly because it's a huge part of their economy, as opposed to fracking, which costs a lot more, rather than the normal, that's shale oil. With fracking in the United States, mainly in North Dakota, that's going to cost significantly higher. So now the spin is, well, the oil is down. It's going to really hurt these shale companies in the United States. But we want the oil price. As you can see, it ballooned in 2022 when they were printing all of that money, all the way up to $92 to $100, really over $100. And obviously we saw it go, or at least recently we've seen it kind of a trend around $75 to $80. And then since Trump's entered, we take a look at the last 6 months, it's fallen off the table. So when Trump entered the White House, if we can get an exact viewpoint on this, it was spiked up around $75, $76. It's gone down almost $15 to around $61.48 in total. And so this is good news. We would like to see it trend again. You want to use the Trump golden. I mean, it's not always going to be the perfect indicator. You look at 2018, 2019, because there's other economic dynamics at play. Like, we just went through a major inflationary period. So we're not looking at necessarily apples to apples in terms of a comparison with 2019, 2020 versus 2025. But we can still kind of draw parallels in terms of the low interest rates, the low inflation, the low energy prices. And you take a look at where energy was trending in 2018, 2019, we're looking anywhere around $55 to $70, $55 to $60, give or take. We're trying to bring it back down to those prices. Now, there might be a little bit of an over autocorrect, especially if we do enter a very short-term recession, which is what liberals will start playing up. It's actually, I'm not trying to guess like people, but it could be a good thing with the recession because people are like, well, everyone's been telling me the economy needs to recover right now. well, let's have the economy stagnate a little bit. There's going to be a lot of bullish news with all these tariff deals coming in the pipeline, but we want to make sure the economic situation is at a point within the next few months to where there is forced action from the Federal Reserve. We need the interest rates cut. So we need that to happen. We haven't gotten that yet. So that's why it's like, well, we'll have the economic recovery. We're going to have that, but this is all part of the plan to get the rates to be cut. So, and energy is another part of that. So it's reacting exactly. See, people are like, well, Trump went back on his word when he decided to take the tariffs off, and it's just a 10% global tariff now. Originally, he was tariffing a lot higher. It was based off of trade deficits with all the countries, and Trump went back on his word. Well, it wasn't because of the energy prices. It was because of the yield. The energy prices are cooperating exactly how Trump wants them to. And you can also see at some of the big ETFs, like this ETF at this point, it's going down as well. This is an energy ETF. And you can see it's fallen off the table. It's down around 15%. Really, since Trump took over, you take a look at Trump on right around January 20th, $93. It's down to $79. So energy is down. We want it down, especially when we're looking at where we're at right now, where we want the rate cuts to happen. We want the economy to be stimulated. We know there's all these negotiations, and there's also a negotiation with China that's going to be happening. Now, that's probably going to be a little more complicated because I would imagine Trump is going to keep a significant amount of tariffs on China. Or there's going to have to be some deal that's worked out to where there will be more competitiveness for U.S. goods in their market, but it's more so we want the more manufacturing in the United States. We have the technological advancements and all of the robots and all of the high-quality jobs we're going to bring back to do it. So it's really a double-edged thing with China. But Trump's even said, I want to negotiate with China, and the Chinese say, yeah, we're open to it. We have to do it. We're very noble people. That's the thing with the Chinese, to where they do have that leverage over the United States in terms of they're a lot better at cutting off their own arm than the United States. And what I mean by that is they will have for their citizens to suffer if it makes themselves look better on a global stage. Meaning, if you're looking at a trade war with the United States and China, there's not going to be an immediate cave by the Chinese, even though we have the economic leverage over them. They have the leverage in terms of they'll allow their citizens to suffer. A lot of them are already in poverty, a lot more than we are here in the United States. We're a lot more easy to complain, if you will, and it also comes down to the amount of force and the amount of power that the CCP has over their citizens, as opposed to the United States. Here we bitch and we moan about anything, and we've got, the democracy, and it's a little bit different. And certainly I'd rather be in our position as citizens than the Chinese, but I'm just saying they have that dynamic over the United States to where they can have, even if it causes their citizens to suffer for a longer period of time, they do not want to be shown up badly on the global stage. So these negotiations, I do not think are going to be like, oh, it's a week or it's 2 weeks and it's done. They're going to be very complicated, and it's probably going to require multiple different sets of deals to be made within a bigger trade deal. It's just like what we're dealing with. Well, it's not the same thing because, these are two completely different scenarios, but it's the idea of, well, are we going to have a peace deal between Russia and Ukraine? Well, first we need the ceasefire, but now we can't even get the ceasefire. We get a partial ceasefire. So it's like, I think there's going to be a number of different deals that are made with the Chinese, but the point of it is the energy prices are cooperating exactly how Trump wants them to. There's turmoil in the markets. They're trying to swing it like, oh, it's a recession for sure. Well, what does that even mean at this point? You're talking about a recession with just the crazy housing bubble, with everything being overpriced, with all the fake money in the market that was printed in 2021, 2022 by Biden. We had ridiculous energy prices in 2022. They skyrocketed. There was 8-9% inflation. Trueflation was at 12% in 2022. And it wasn't even like there was a crazy, we had a net back-to-back negative quarters in terms of GDP growth in 2022. And so that's a recession in and of itself. And that's really with no positives coming from the recession, because normally you can recoup, just like Trump is doing, where everything is down, like the trueflation, the inflation. The Fed is going to have to cut the rates. How about in 2022? Very little economic growth, virtually no economic growth. That's why we had a recession as classified by back-to-back quarters of negative GDP growth. But there's no you still have ridiculously high inflation. See, we have trade-offs now to where, yeah, we're gonna have there's some turmoil right now in the stock markets. I'm not saying there's not, but there's trade-offs to where you lay the bedrock where the energy prices are down, crude oil is down, uh, it's all going lower, inflation is lower, it forces the rate cuts. All of these deals are negotiated in the pipeline, and now we have the bedrock of the Trump economy laid with lower interest rates and lower inflation for the foreseeable future. Oh, but tariffs are inflationary. Well, then why is Trump doing deals with every country to remove most of the tariffs? And Trump's going to keep some on, and that's why I said I still think we're going to generate 200, maybe $300 billion in revenue every year off of tariffs alone, because there are some companies in the United States that still, depending on what the trade deal ends up being, will stomach the tariff cost to trade with the Chinese. And so we'll bring in money that way. And you may say, well, that'll raise prices in the United States. Well, it depends what sector it is exactly. Some of these companies have ridiculous margins. They're going to absorb most of it. That's the hope. Is they're going to be the ones that their margins might get cut a little bit, but it's not going to fall much on the consumer because we have competitive markets in the United States in a capitalist society. So we'll have to see how this all plays out. But I'm saying these energy prices are cooperating exactly the way that Donald Trump wanted. And you see all these stories about the oil prices. Oil deals slip as prices fall. Oil producers seek to shore up finances amid crude oil plunge. Gasoline prices expected to fall as oil hovers near $60 per barrel. U.S. crude oil falls more than 3% as traders focus on the escalating U.S.-China trade war. That's what people are saying. This is the reason. Yep, of course, there's the turmoil within the markets. There's the unknowingness with the current trade situation with China and other countries. At least right now, there should be negotiations and deals done with pretty much everyone. But this is the ideal situation. Now, we'll see if this falls any further. It becomes a little bit of a problem in terms of oil companies being able to generate a profit. But at the end of the day, this is where you would want the oil prices to be at this point. There is cooperation based on Trump's plan. And so we'll have to see how this all plays out. But either way, guys, that is going to do it for this video. Make sure you follow me on X. Link to that's always in the description.